Welcome to the weekly edition of Dynamic Clips. My name is Abdul, and today we are going to talk about some of the major changes that will be taking place for the 2018 tax return. Some of the things that we'll be covering are itemized deductions for homeowners, standard deduction, child tax credit, dependent credits, and the tax deductions that are eligible for business owners. One of the first topics that we'll be covering are mortgage interest deduction and real estate taxes. So in 2018, there is now a cap, which is $10,000 on state and local income tax. What that means is the total state and local income tax plus the real estate taxes that we pay to local authorities, we cannot take more than $10,000 in deductions. So those of us that are living in New York City, California will be affected by this because our state and local income tax paid to those states chances are it's already exceeding the 10,000. As a result, we are not getting any benefit for real estate taxes. Also, there will be the interest on home equity loans has been eliminated. In the past, we are able to take a deduction on interest paid on loans up to $100,000. That deduction is no longer available. Also, this is a very important change. In the past, we were able to take a mortgage interest deduction on mortgages up to $1 million. Going forward, on all the new loans that started on December 15th of 2017, the deduction is only available on loans up to $750,000. What that means is if you bought a house that cost $800,000 or $900,000, your interest deduction is only eligible up to the $750,000. Also, what does all of this means? What that means is the new tax law actually did not benefit homeowners as much as renters. For example, those of us who are renting, we are getting a standard deduction that has doubled from last year. For example, single filers, we received a $6,000 deduction, and this year we'll be receiving $12,000. And those of us who are married, we received a $12,000 deduction in the past, but going forward, we'll be receiving a $24,000 deduction. So ultimately, those of us who owns a home, we may still end up taking the standard deduction because our itemized deduction may still be less than the standard deduction. One of the positive changes that will be taking place is the child tax credit. In the past, we received $1,000 credit per child. However, in 2018, it will be $2,000 per child. Also, the refundable credit is $1,400 per child. What that means is if your tax in your tax return is zero, you would still receive at least $1,400 per child. Also, the personal exemption has been eliminated. In the past, we received a $4,000 deduction for every dependent that is in the tax return, including ourselves. But going forward, we will not be receiving the personal exemption for ourselves. However, for ourselves, meaning the taxpayer and the spouse, but we will receive a $500 credit for eligible dependents. The last topic that we are going to cover is the 20% tax deductions for business owners as well as pass-through entities. Business owners would include the sole proprietors, and pass-through entities includes partnership income as well as S-corporation income. So these are eligible for qualified business income, so you should always consult with your accountant to see if you're eligible for this deductions. And also, please give us your feedback, and if you have any questions or need consulting, please feel free to give us a call.